The reason why I like high dividend funds that move sideways to down is because they help me live the FIRE lifestyle. QDTE, XDTE, JEPY, and QQQY. These are funds by Defiance and Roundhill. Well, I've been getting a lot of complaints about them, but they're helping me live the FIRE lifestyle. They help me earn over $200,000 per year in dividends, and they're helping me outperform the market. And I have 5 reasons why they help me live the FIRE lifestyle. So we're up 14.46% for the year. The S&P's up 10, the Nasdaq's up 9, the Dow's up 5, the Russell's up 4. I say this not to brag, I say this to show you that I'm outperforming even with Defiance and Roundhill funds. QQQY, JEPY, XDTE, QDTE. Again, I've been getting a lot of complaints that these funds decay and they go sideways to down. And yes, I'm down in my account. On paper, I'm down 4% in each of those positions. If you want to follow my portfolio, just click the join button on my wall, or I'll link it in the description below. Also, if you need help living the FIRE lifestyle, living free from a 9 to 5, email me for my e-guides at akintodd48@gmail.com. See, I'm outperforming here because we use margin and dividend funds that go sideways to down over time, including Defiance, Cornerstone, and also Yield Max. All of these funds have NAV erosion, quote unquote, but I don't worry about NAV erosion, and I have 5 reasons why, okay? First of all, no matter what they do, okay, let's just keep in mind, they have a 60% dividend. So if we go to QQQY, it doesn't matter what they do, okay? Even if they're going down on the chart, 60% dividend, if you hold this fund for just 2 years, you're paid back in full. A lot of people keep saying, well, why would I just have a fund give me 60% dividend? Look at this chart, Todd. It's just returning my own money to me, returning my capital to me. Well, return of capital is tax-free, and I'm up in my positions. Okay, once again, if I show you my portfolio, you'll see that I'm down 4% in each of these funds. Okay, I'm down about $4,000 in each fund, but I collect $10,000 a month from Defiance funds. Okay, you can see here from some of my earnings here with Defiance, you can see that we earn about $10,000 a month from JEPY, QQQY, and IWMY. You can see them here in my estimated income tab. So if you say view 50 more here, you can see all of them: IWMY, QQQY, CLM, CRF. This is where we get another $5,000 in dividends from Cornerstone, but then JEPY, another $2,000 down there. So we get approximately $10,000 in dividends per month from Defiance, and we're down $4,000 in each position on paper. But if we've been getting dividends of $10,000 a month since October, that's about 6 months, and that's about 60 grand. So I'm down 15 grand on paper, but I'm up 60 grand total. So that's why my performance is outperforming the market. Okay, and I haven't even given you 5 reasons. The key 5 reasons, I haven't even given them to you. So here's the first reason why I like Defiance funds and Roundhill funds. First of all, they pay down my margin debt. So $250,000 we have in margin debt, but if you go to my estimated income, you'll see that we earn about $230,000 in dividends. So my margin debt will be gone in around 1 year, and this is thanks to Cornerstone, Defiance, and Yield Max, but Defiance pays down most of my debt. All right, so most of that debt will be paid down by Defiance because I need a big dividend payer that pays down my debt, and then I need Cornerstone for my growth because QQQY, as you can see there on the chart, it goes down over time. Even though if you just hold it for 2 years, you're up. And a lot of people say, well, return of capital, this is returning my own capital to me. Why would I want to do that? But again, I showed you that I'm up. And also, return of capital is tax-free. Again, so those are 2 separate reasons why I like Defiance and Roundhill. But to help me live the FIRE lifestyle away from 9 to 5, I need these to pay down my margin. Okay, so Cornerstone is where we get the growth, CRF. Okay, and for those of you who don't know, Cornerstone is a 4-star fund. You can find it here on Morningstar. It's highly rated. Usually it's a 5-star fund. It fluctuates between 4 and 5 stars. So I park most of my money in Cornerstone because, as you can see here on the chart, it goes up left to right on the chart. Now, if you look at it on a total chart, you'll see it goes down, but you have to factor back in stock splits, dividends, drip dividends, and RO. So the special drip for Cornerstone, that's one of the best features of it. It has a 21% dividend, Cornerstone, that it drips down at the NAV for free money every month. So if you own it up here, it's giving you the dividend down here at the NAV. So you get free money every month from Cornerstone, and that's why it's a 4-star fund in my opinion. It tracks the indexes, so it meets a very important goal for us at this channel. It's very unusual to find a fund like Cornerstone that's tied to the indexes, but also gives you a 21% dividend that it sets every year at the NAV, so it doesn't fluctuate on the dividends. And it also gives you a return of capital, which is tax-free. But again, you have to learn how to play this fund properly, and that's in my Volume 4 e-guide. So I need Cornerstone for the growth, and also it goes down over time, as you can see, but you have to factor back in certain things to understand why it's outperforming the markets. If you wait 5 years, a 20% dividend times 5 years, that's 100% payback. But with QQQY, your payback is even sooner. It just doesn't grow for you. But I like to have a good amount in these funds because, again, they accomplish a big goal for me. They pay down a good chunk of my margin every month. But the only thing I don't like about these funds, again, is that they don't grow, and that's why I just showed you Cornerstone. You have to have a fund that gives you growth, but they also have this high maintenance, okay? So they have 50% maintenance, and that's why I don't like Roundhill and QQQY funds that much. I mean, yes, they pay me a big dividend. They accomplish a huge goal for me at this channel, which is to pay down my margin debt in a short amount of time. But they don't grow, as I just highlighted, and they have 50% maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. You need to have low maintenance names so that you can have the highest available withdrawal possible. That's how I live the FIRE lifestyle. That's the secret to the FIRE lifestyle, is low maintenance. So Defiance and Yield Max, most of them, even Roundhill, they're 50% maintenance funds. But you can go to other brokers that have lower maintenance if you want to actually raise your equity in the process. However, those other brokers might not have the special drip for Cornerstone. Yes, everything comes back to Cornerstone, okay? Every video I make, it's always going to come back to Cornerstone. How do I pay back my debt in 1 year? Well, yes, my dividends from Defiance and Yield Max will pay this back in a short amount of time, but Cornerstone, if I drip that dividend down at the NAV, how do I pay back my debt? Again, I use the rights offering in Cornerstone every year to pay down my debt. That's also in the Discord chat room. When you buy my e-guides, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. So we have around 1,000 members here in this Discord chat room pursuing the FIRE lifestyle, who are all watching this rights offering announcement closely, because Cornerstone is the way to really level up your account and raise your equity because it's low maintenance. And if you can play the rights offerings properly, you can really grow your account fast because it tells you when to buy, when to sell, unlike the S&P, which does not tell you when to buy and sell. You have to guess on your own when to rebalance. So everyone says, well, I don't want to be in Cornerstone because you have to be active in it. Well, you have to be active with the S&P too. You have to be active in Defiance for that matter, because how I outperform with Defiance, which I've laid out in past videos, I rebalance QQQY on market dips. I do not drip this. It doesn't give you a special dividend like Cornerstone does, so it doesn't give me an advantage to drip this. Plus, you don't want to drip unless the market falls. That's how you really lower your cost basis, okay? So I've given you the first reason why I like these Defiance funds. They pay down my margin in a hurry, okay? The second reason why I like them is they qualify for income to banks in a large way. All of my dividend funds qualify as income to banks for loans. That's also how I level up my account. Cornerstone pays me a nice dividend. It qualifies to banks for loans, but it's not as high of a dividend as Defiance funds and Roundhill. So they help me pay down my margin quickly, and they qualify for loans to banks. Now, I don't mind if I don't pay back my margin quickly because I have low interest rates on my margin debt. I've negotiated down twice. Many of my clients who bought my e-guides did the same thing. When you buy my e-guides, you also get my phone number for life. So you get free Discord access for life, where we alert you of the Cornerstone rights offering announcement, and you get my phone number for life. Just keep that in mind. So that's the second reason why I like these Defiance and Roundhill funds. They qualify as income to banks for more loans. Loans just to live free from a 9 to 5 with. You know, you have to have pay stubs to live in a house or to buy a car. So these dividends qualify as those loans, so you can be free from a 9 to 5. Okay, the third reason why I like Defiance funds is they actually give you upside potential. Look at what we're up on Friday. We're up $5,000. 0.61%, which is really all I care about, 0.61. But look above at the indexes, they're up 0.12. Look, the NASDAQ was down 0.12, and the S&P was up 0.11. Okay, so they actually give you days gains. Look, QQQY was up 0.3% on Friday, and the NASDAQ itself was down. So you can actually make money in these funds on a down day. They give you upward price appreciation for a moment. You can see in these charts here, they have upward price appreciation where you follow my mouse here, and then it has the drop on the dividend, and then it has some upward price appreciation, and then the drop on the dividend. So this is normal, this is routine, but in between the drops from the dividends, it's giving us performance, okay? These days gains that we get, this helps us get extra performance, which helps us beat the market. Obviously, we're up 14%. We're beating all of the indexes once again, and that's because of Cornerstone and these large dividends from Defiance that I buy using this margin debt. So I get extra dividends from these funds, which acts as growth. Okay, I get my growth from dividends, once again, not market gains. But again, Defiance funds can actually be up on a down day, or on a down day they'll be down less than other names. We can go check out XDTE. It's really the same thing, but they pay weekly. Defiance pays monthly. So XDTE, you can see it was up here as well. So these funds can actually collect premiums and be up on down days, or be down less than the market on down days. So that's the third reason why I like Defiance and Roundhill funds. The fourth reason why I like these funds is, well, they're stable. Okay, they go sideways to down. When you're using margin, you don't want to be buying stocks that are, so volatile that there's dramatic peaks and valleys and fluctuations in your account. You want sideways movement so that you can stabilize your account when you're using margin. And then lastly, I like Defiance funds and Roundhill funds because they're indexed. QQQY, if the index is down 1%, QQQY will follow the index. If the market's up 1%, QQQY will also follow. Again, maybe not to the exact degree, but at least it won't be like a stock where it could just have some headline risk and it just blows up overnight, whereas an index will never do that. Okay, so that's why I need index performance, especially when I'm using margin, because I want that safety. But even if you're not using margin, you still want index performance, because 90% of traders can't beat the market and 90% of fund managers can't beat the S&P. So you don't want to trade because it doesn't give you qualifying income for banks to loans, and most traders lose over time. And also fund managers can't beat the S&P, most of them. So you better just buy the S&P, but I buy the S&P with leverage. So if you need more help doing what I'm doing, email me for my e-guides. If you want to follow my portfolio, just click the join button on my wall, or I'll link it in the description below. Also, when you buy my e-guides, you get free access to the Discord chat for life and my phone number. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.